Welcome everyone to the Kendall Report. Good morning. Getting a positive start to the day. It was, I've got my notes here and there's not very much on here because there's nothing to talk about. There's absolutely no economic news of any consequence yesterday or today. We're really just, I guess, waiting till the Fed minutes come out tomorrow. But pretty lackluster, kind of sideways, choppy range here. So not a lot to talk about. I thought I'd get your attention. How low will Tesla go? Tesla's really getting hammered, and I don't think it's going straight down to zero right now. But there's I'll get into that at about the mid-session today. So we're just looking around at what's going on so far this morning. 10 years down to 3.79, been hanging around 382. The S&P futures up 1950 right now, up 0.5%, 39.77. Bitcoin was down under 16,000 there for a while. It's bouncing back. Not sure exactly what the low is. We'll see that in a little bit here. The patterns that I'm kind of going to be looking at today are kind of interesting here from the standpoint of how the algos are setting up on the S&P and across all the indexes. So we'll get through all that here as well. Let's go ahead and see what time we got. We got about 8 minutes to the open. So let's go ahead and get through market grid numbers, those type of things, and just get this set up here real quick. Okay, so let's get over to market grid numbers here. This is going to be, we get to the daily numbers to start. Kind of an interesting range. Something I didn't notice yesterday, and I apologize. We did have a cycle low come in yesterday, so maybe we're getting the effects, a little bit of a bid here this morning. Looking at the grid, let me bring this up so you can see it. And I think, we're going to continue to chop around. Yesterday in the live room, it just kind of, everything came into this sideways choppy range. And I'll lay out those ranges today. But I think we're just going to wind down into holiday markets here, folks. I'm not sure there's going to be much to go on. And just to remind everybody, there won't be a stream on Friday. Thursday's obviously a holiday here in the U.S. And so I will be here just till tomorrow. That'll be it. We'll do the live room tomorrow as well. And we'll call it, basically call it a week. And so a little bit of a break, I guess, from that standpoint. But if we look at the market grid for today, so far on the action that we've seen so far right now, 39.87 is R2. We've been above 71, which is R1. S1, 39.44. Man, I'm telling you, if you folks have these indicators, what a great overnight low that's projected. 39.44.25 is S1, low 39.45.25. So pretty much spot on, dollar off, I guess. But the range I'm probably going to see maybe an 87. I don't know that we can challenge 44,000 here. That continues to be kind of the big, I guess, the 10,000 pound elephant in the room is 4,000. Can we get above there? We traded up to 40.50 last week, so we'll see how this thing sets up. But I don't have a lot of expectations. Like I said, there's nothing to really drive the markets. What we are seeing, that we're seeing a little bid from, is all the talking heads from the Fed are running around talking things up, and everybody's starting the usual speculation that the markets get into around, is it going to be 50 or 75, and they're going to do 50, 25, 25. What's it going to be like? It's kind of a useless, I guess, exercise, but it's something markets feel they need to do. Let's go over to the NASDAQ, take a look there. The grid's 11,642 high, R1 11,646. We basically printed R1. Can we get to 11,711, which would be R2? That would be my expectation that we could get there. The reality is that we may already seen the range for the day. We may just continue to chop around. We'll go to the algos after the open just to see what they're telling us, what the setup is for the next several hours anyway. The S1, 11,529, low 11,526. So S1, R1 is already printed. We're just waiting to see if there's any, which way we're going to expand. And I'll be able to pick that up off of the algos as we get into. So we've got about 3.5 minutes to go. Let's take a quick look at RTY. Similar type setup here, 53 high, R1 5170, S1 1834, low 37. So we're printing R1, S1 across the board. I have a tendency, I think we're going to be able to expand to the upside. So look for R2 across the board. When we look at the algos, we'll be able to fine tune this in a minute. And just so you know, there's not a lot of premeditated stuff. All of the analysis I do is real time with you as we go through the stream every day. So I haven't even looked at glanced at the algos a little bit. I have a basic concept, but we'll go through the full analysis here in just a minute. So we'll go ahead and go back to our main screen. Just talk about a couple things. There's not a lot to talk about, but I will tell you sometime after top of the hour today, this Tuesday is where I cover individual stocks. So I'm going to go through Tesla, a couple of the big stocks, but I'm also going to be soliciting from you some of your stocks, and I'll fill in some of the time after I get through there for some requests from you folks out there live. So we'll do some random requests, like the old school days of the 3-hour live streams I used to do last year and the year before. So we'll go ahead and I'll let you know. Don't give them to me yet, because I won't be able to scroll back through the timeline and see them on the chat. So go ahead and make sure that you just hold back. I will solicit those numbers when we get there. So we are about 1.5 minutes. Let's go ahead over to our level 2 screen here, and just get ready for the open. We're up 18. See what kind of activity we get. Pretty quiet. You can see the right here, the 5-minute chart. Around 7 a.m. New York time, we've been running up for the last couple hours, printing all the way up from 58 all the way to as high as, looks like, I don't have the exact high, but into the 80s. 79.25 was the high print. So we printed about 20 handles. And so we're just about any second here. We should get an opening bell. We have over, excuse me. Yeah, we should get a bell any second here, folks. We'll see how many folks are playing around right now. Here we go. So we're printing almost at the high of the session. So far, the overnight session, 77.25. Longest minute that I've ever seen. There we go, folks. All right, they print them up at the high. We printed 79 even there off the high, so we'll watch that volume bar over here start to grow to see what kind of stability we get. Same thing every day. order book is pretty erratic at the moment, just kind of jumping around, everybody trying to get their trades on. This is always a hectic time. Even though everybody's sitting at their desk, here we are printing the highs of session, new highs coming in, printing all the way up to 80. Like I said, I think we'll probably work our way up toward that R2 number here. So decent little print there. Now, so we'll get some stability here, and we'll watch this for a couple of minutes. Nothing really big now. Just, the very opening of every day is just, it's kind of a coin flip on how things are going to end up panning out. Just seeing who shows up and what's going on. Order book always looks the same way. Not just some downward pressure coming back in here now. So we printed up, print a new high, and now we're starting to stabilize. If you look at the 5-minute chart here, you'll see that the market grid is in a square box. And when it gets in a box formation, usually typically means we're going to get some consolidation, trade within the box. We traded just below it. Now we're back in the middle, back at 77.25. So yeah, like I said, this first couple of minutes is really just chaotic and not really anything there at all. Just bringing up, sorry about that. Gotta watch what you click on when you're live. So yeah, just like I said, we'll just hang around here for another minute or so, and then we'll get into the algos, see what they're setting up for the session. We'll go through the database and our normal technical view, and then I'll cover some stocks. On Tuesday, as you folks should get used to, is that we do some stocks, and I'm going to, one of the things I did talk about yesterday, that we're going to start our PortfolioXpert and Wavetech training. I forgot it was a holiday week. It's going to actually start next Tuesday and Friday, and I'll get information out to you. So if you are signed up on our mailing list, you can get on that list just by going to kindlereport.com, fill out a form. We don't abuse you. We're not spammers. So we just put out information when we have things going on within our what's going on here. So, all right, let's go ahead. It looks like we've stabilized here just a little bit. Still some downward pressure coming in after printing new highs. Like I said, I don't think we're going to see much of anything here today, folks. I don't know what's going to move the market. I'm not sure anybody's even around to trading much right now. I think by the time we get into this tomorrow, we're not going to have much. I guess there'll be some people watching the Fed minutes come out tomorrow and those things. But let's go ahead and just look at, go to the algos and see what's going on there. And as always, I'm going to start off, this is the 1 minute chart. So I'm going to do 1, 5, and then go to the hourly. But I want you to see that the algos are suggesting that if I would have brought this up, we were looking at downward projections coming in. So now we're looking at moving down. This is a 1 minute chart, so down to the 200 period. Algos are looking like we're going to stabilize, but what's happening is all the averages are rolling down. So we're going to see some downward pressure probably hanging around this 200 period moving average. It's at 69.75 right now. Let's go to the 5 minute. See what's setting up. 5 minutes also suggesting more downside here, looking like we're going to challenge the 40, and the 40 is also at 68.89. So we had the 200 on the one at the right at the 69 level, and here we are 68.95. So there's some decent support here, but it looks to me that we're going to get all of the averages to roll over pretty hard here. So we're probably going to come back in and maybe print down into these 50s, maybe even set the numbers from, go down and maybe retest that S1 number. It's a pretty tight range right now. So Let's go ahead to the hourlies, and we'll just try to set up the next couple hours. We do have some support underneath the market here on the hourly chart at 63, and that number is going up about 1 handle per hour right now. It's pretty moderate, and algos are suggesting that average is going to continue to be steady. But really what's happening is we're trading up at the upper bounds here of the pattern. So we're probably going to come back in toward the lower part of the market grid right now. This is hourly S&P. We're looking at look at all these numbers. S3, 3970, our STX, 3967. So everything on the 1 and 5 are setting us up, looking like we're going to trade toward that 69 level, maybe 67. It doesn't look like a rollover. However, if we were here for another hour, we would see that most likely the market grid is going to turn down, and we'll probably maybe get a minor channel heading down. So as far as I was expanding, maybe expanding up to the R2 level, it's now looking like maybe just a sideways and potentially going down to the S2 level on the market grid on the daily. Let's go ahead and take a look at the NASDAQ. We'll just go on the hourly. We're already taking out STX here on the hourly. Nothing here, folks. I mean, these algos are just completely sideways. We're not really looking at anything drastic other than the NASDAQ is a bit weaker than the S&P. So we're seeing this basically trade down through here. As far as any targets go, there's no real targets. But like I said, the market grid's going to turn down unless we rally back and close back above the 40, which is 11,623. Last trade right now, 11,589. So we're just looking at the pattern really setting up for a downside. We're printing new lows as we speak. And if I went through the whole segment of doing 1.5 and hourly, you'd see that set up. It's a lot of things that we go through in the live room, just trying to set up what patterns, where we're going to trade within the daily range, so we can fine tune the daily market grid using hourly. 1.5 hourly charts are all you need to actually completely set up exactly where the ranges are going to be. Yesterday, we ended up in a very tight trading range, and I love those trading ranges because you can figure out where buy low and sell high is. And so we're getting hit pretty good here. The NASDAQ is selling off pretty decent. We're well below the STX. The algos are suggesting that this hour will stabilize after this first negative hour. So we'll see how that sets up around those ranges. Let's do the RTY. Even more drastic downside. But like I said, at least for the next hour or so, it suggests that after this first hour, we should probably stabilize here and get into more of a sideways range. The update on those of you that have the indicators, when you see the hourly updates on the market grid, then you'll know that should stabilize and within that market grid the next hour, especially if we stay where we are right now. Long ways to go. We just opened. So it's a whole hour from now. But the point is, if we get to STX buy signal, then we should go sideways for a couple hours. Basically, that's what the algos are telling us across the board on all the indexes. So let's go ahead and get into the database, and then we can get in through the technicals and get into our section on stocks today. So we did get a little bit of selling on yesterday, not a lot. We got 328 buys, 415 sells. Yesterday, we were at 82.25% bullish. Today, 81.56, slight downtick. And those of you that, if you've seen that, how this first wave, secondary wave of buying goes, what we're likely to see is that the database will start to decline over the next several days, heading back towards 68 to 62, potentially going back to 58%. And that starts the first waves of selling that comes in during this during the cycle. So you get the initial wave, which was back in the lows when we were printing down in October lows, and that's where we started to see a lot of buys come in. So those will roll out, and then we'll start to get the secondary buying coming in shortly after that. And let me just, while I'm going through that, let me just see if I can bring that up pretty quick here. Hopefully I will. So this is what I'm talking about here, is what happens is we get the first wave when we're coming off a low, we get where we build up all the way up to the peak. So this is same kind of cycle on the daily short term. So we start to get this selling, but the market typically will continue higher. So we'll see if that plays out here from that standpoint. And I just realized that let me go full screen so you can see what I'm talking about. You can see that. But yeah, so this is the pattern here where the initial buying that comes in the database pushes the markets off the lows. And then this is the intermediate, but it's the same type of cycle. Then where we're getting right now is where we hit the peak level, where we're at this 82%. We start to decline, but the markets stabilize and usually have one more leg up. So there should be another leg up in this market. Will it be big? Can we get above the 200? I don't know. Let's go into the technicals and just see if we can get a flavor for that. But as I pointed out, this is the short-term database. We have all 12 sectors are long. We've got 90 of 122 industry groups long. So there's the underlying breadth in this market. Now, this is not just, like something like the number of stocks above the 200-day. These are symbols that have been identified to have trending, that are in uptrend and have probabilities of meeting the stats that are in our database. And every symbol in our database, if you were to click on it, actually gives you an estimated return on the trade and what the typical does and the standard deviation and the mean, all kinds of information about the trade. So a lot of these trades are going to yield and already have yielded quite a bit of profits. All right, so let's get into the technical part. And this is the interesting thing that I was mentioning to you just a little bit ago, is really what we're getting into is the algos are starting to suggest that the market's going to roll over here. And I've been expecting this next, we've got a couple of things going on here. We have fib targets above the markets. So it's going to get incredibly important over the next couple of days, whether we're going to hold this pattern or not. And we went through this scenario in the live room yesterday, and basically the fib target one on here is 38.27. The 40 period moving average is 37.94. So at least initially, it looks like we could trade down back into the 38 handle. And the only thing that's going to save this, if somehow we can print above the 200-day, which is 40.30, and I don't see that happening, not this week. So it looks like the algos are suggesting that we have maybe one more day to the upside, and then we're going to see maybe come back on Friday and coming into next week. It looks like there's some negative movement to the downside. Estimation is that we will hold this 40 period moving average down as 38.20, and this number's rising, so it's not going to be, might be 38.40, might be maybe I can come up with some Fibonacci numbers that will make some sense. as far as the retracement value goes. But right now it looks like we could print back into the 38 handle, 38.50, 38.20, just round numbers, just a guesstimate from there. All right, so next we'll look at the NASDAQ. Similar situation. Looks like one more day that this pattern wants to hold up. It's starting to get a little weak. We're down 45 now on the NAS, 11,539. And just looking, this is daily, looking at S2, 11,464, 11,529. So we are, like I was talking about, we just actually not only retested, but pushed down into a new low here on the session. So S1 has already been expanded. So watch for S2, which is the number I just mentioned at the 11,000. Let me make sure I'm at the right place here. Yeah, S2, 11,464. So could be some more downside here for sure. There's really not, other than that pattern, just like I said, we're actually below the 10-period moving average, 11,624. And I don't know how the best way to put this, folks, but this is really a critical juncture in this pattern. And the NASDAQ has different levels, 11,314. We'll call it 11,300 is probably going to be a critical level on the downside. And we're going to probably challenge this. Whether we challenge it in the next couple of days, it's going to get challenged here very soon. And the algos are suggesting we could have some decent downside here for a couple of days. We look at the fib targets here, we're looking at 11,020. So we talked about yesterday the 12,000 level having a lot of resistance there. So maybe it's just 11,000, 12,000 kind of market right now, and there doesn't seem to be any conviction. And I talked about this as well. You know, we're here at the 22nd, so we'll get through soon. We'll be at the end of the month, and we'll have the big report on employment. Then we'll have the Fed coming up, and then it's just winding down for the year. And we talked a little bit about this in the live room yesterday. Is that really what we're getting? Is that classic annual year wind down? Everybody's knowing, if you go and I think I mentioned this a little bit yesterday, but if you look at all the reports, nobody's talking about 22 anymore. Everybody's talking about 23 and 24, and that's really the only thing to talk about. This year's done. It's been a really bad year, and a lot of folks have been damaged really bad. There's just so many stocks that are still way underwater. It's amazing. So it's been reasonably selective as far as what's really moving here. And I'm still, like I've been teasing you for a while, that there is. I am working on a project, and I did get some more work done on it. But I am going to reveal at least what I think is going to be the play for 23. I've been pretty good over the last couple of years. If you followed me, I told you that, you know, energy was going to be a big play going back to November of 2020. And I guess that was fairly easy to call, right? But the having the technology and building ETF hacks and all that, I mean, we've had 3 years in a row on energy at over a 35% returns on our energy portfolio. So, I mean, that's pretty steady as they go. You know, we suggest a lot of this stuff to our institutional clients that they should have this in there. If I were running it and I didn't have a compliance department, I'd have all my money in those items. I think there's still some things that we'll cover as we go as far as the energy stocks go. I think as long as crude stays above, a certain level, they're going to do well. But let's go ahead and get back on track here. From the standpoint of the NASDAQ, none of this stuff matters. What we're really looking at is, how far do stocks like Tesla and Apple, and I'm going to cover those here in just a few minutes. So I'll go through some of the top stocks, and then, like I said, I'm going to solicit some stocks from you guys just to see what you want me to cover, and we'll go until we get close to the end of the stream for the day. So let's go ahead and get into the Russell here. So the Russell has the same pattern. All the algos are suggesting that these moving averages are going to roll down. And like I said, I'm looking at the 40-period moving average being a major support level here, 1781. Fib target 1 here is 1795. So we're going to call 1795. 81 is going to be where this market should support. We're trading 1840, so that's a fair ways down, but it does look like after, whether it's today or tomorrow, we're going to start to see some downside on this thing as well. So there's really not a lot here from that standpoint. So I mean, that's pretty much all that's here. We're just in this very low volume, choppy markets right now. So let's go ahead and just move on. We'll just go to the treasuries here. So treasuries are interesting because the algos are starting to suggest that yields are going to try to uptick here. We're right at the very bottom of the market grid here. The 376 is the STX, the low so far, 376.5, last 376.8. So we're pretty much at the bottom end. We do have these fib targets under here, so it looks like another day or so, and we should start to see at least some of this downward pressure burn off here on the 10. So we should start to trade back up toward the 388, 392 range over the next couple of days. It looks to me we're going to stabilize. And there's really not much more there from that standpoint. Like I said, we're just looking at, trading ranges on virtually all these markets. So it's going to get, I think it's going to get incredibly boring after the first week, maybe the second week of December. So we've got about 3 more weeks of reasonable markets, and then it's just going to get unreasonable, and everybody's squaring up books, making bets for next year. That's pretty much how everything's going to set up here. Let's go and just look at the weekly here, just pretty quick, just so we can have a handle on that. Weekly, a little bit of a conflict in the analysis. It continues to suggest that there's downward forces happening here. So the short term looks like a few days of stability, and then the longer term is suggesting that this 10-week moving average is going to be major resistance. Guess where that's at? 3.917, 392. So that's going to be your cap. The bottom end is more than likely at the 21, which is also fib target 1 here. And that is at 344, and fib target 1 is 337. Seems pretty ridiculous numbers, but that's going to be your extremes as far as it goes. I think a lot of folks are going to be looking at what's going to happen in the economy from the standpoint of we come into next year. I think you'd be hard pressed to find anyone that isn't talking about a recession. And it's kind of interesting. I don't know if you folks noticed it, but if you go to Bloomberg, CNBC, you name it, Yahoo Finance, all of these places, I'm pretty sure that all male economists have died because none of them are showing up on TV anymore. It's only, no offense, I'm happy with the girls, but there's only just women economists now, and every analyst from every firm. So, and I appreciate the diversity and everything, but it just seems like everybody, all the guys disappeared. There's some pretty talented guys, and there's some pretty stupid guys out there. But I'd like to hear from them. I'm missing them a little bit. So and I'm just like, I noticed that this morning on CNBC. I mean, it's one after another, and I think it just went from imbalance one way to imbalance the other way. So maybe there will be a balance come back into the markets again. But it's just interesting to notice. I just happened to realize, wait a minute, I watched several interviews, and that's the way it was, and that's all good, I guess. But there's some folks that used to come on that are pretty talented, and their voice is gone, and we need to hear those voices as well. Just a comment, So don't troll me on that. I'm just telling you what I observed, and I miss having some of these folks out there that used to come on from some of these firms, and so anyway. But all of this stuff from the Fed, same thing's happening with the Fed is just continuing this dialogue, and now maybe they're making a little verbal pivot here while we're talking about the interest rates, is that they're starting to go, well, we need to know that there's a lag, and we want to be, aware of the lag and all that stuff. I don't know how you pronounce her name. Is it Daly or Dolly? I'm not D-A-L-Y. I'm not sure how to pronounce that. But she's been out there really hammering on this whole thing. And, everybody wants the pivot. Everybody wants the inflation pivot. But I can tell you, and that's just going through these forecasts here, is what's coming up for me here, is that the forecast are telling us that yields are going on the back end of the curve are going to continue to go down. I think the whole terminal rate on the Fed funds is going to be 5.25, maybe 5.5. They're going to push it up there. And I still think they want to break something. I still think they want to break the labor markets and get employment to go up. I saw somebody, I think it was Robert Wright, who's always wrong anyway, but he was saying that, Elon Musk, all these people are, he's laying off people, but meanwhile he supports the Fed while they're trying to get you unemployed right now. It's just that's how they're going to break inflation, is to bring up unemployment. So they want supposedly their dual mandate, right? They have a little bit of a conflict right now, and I think that we will see something break. I think we'll see some elements of the markets, maybe what we're seeing here on these forecasts for the 10-year is becoming quite real, and maybe 340, 350 yield is not really that outrageous from looking at the back end. And I showed you, if you go back, I think it was last Wednesday, not sure now, days flying by, but we're looking at, when I did the yield curve, having the Fed funds and that front end of the curve. Everybody looks at 2-year. 2-year is worthless. It doesn't mean anything. It's just a place there's a hump in the curve, but the 5s and the 10s and the back end of that curve is very substantive and tells you a lot about what's going in the economy from the standpoint of what kind of demand is on money, especially real estate's already been hit pretty good. I don't see that coming back anytime soon. Even if they downtick a little bit here to 3.5 on the 10-year, there's still going to be a pretty good premium on some of these mortgages. So I suspect that the premiums that are being placed and the spreads on the mortgages versus the 10-year are going to stay a little wider than than normal for a while, I think. And that's just an opinion. I'll update that as we go through there. All right, next we'll go to the crude oil. And crude oil is getting a bit of a reversal. I mentioned yesterday I thought we were pretty close. We actually hit just about fib target 2, 71.76. The low was 75 here. So this is the weekly chart here, folks. So we got pretty close to those weekly numbers, a 71 handle. Back at 80. I don't know if you saw, but I don't know who it was. Somebody from the energy department said that they want to buy the SPR back in the 70s. So now what they've just put a floor on the market, right? So no one's going to let them. Everybody's going to want them to pay up. So we'll see how this thing trades as we go forward. 81.23 last trade right now, and weekly is really suggesting more stability. We're likely to get back into these moving averages here. 86. You guys remember these numbers. 82.92 is the number for a while. Now we're looking at 80.92 on the upside. So we're still looking at 86 as resistance, and then the extremes are up at around 92. So still see the pattern here on crude is going to stabilize. We shouldn't see anything drastic happening from this standpoint. Although the 200, this is weekly, the chart we're looking at here, the 200 week is at the 65.47 level. I don't see us getting down there, but there is a 62.89 fib target 3. I mentioned the 71 handle is where fib target 2 is. I think we've probably seen the lower end of this. And if you just expand this out a little bit, you can see most likely, I'm going to draw something in here just so you can get a feel for this. And what I want to show you is the pattern. I think this is what we end up with, is just kind of one of these patterns. I showed you I think I showed you on another market, but this is really what's going to happen. You're going to get boxed out here. We still have upward projections up on the patterns on the upside up here. You can see there's some fib targets up here, and so we still are most likely have two bands that we need to watch here, and I think this is probably the bigger one here. Is we're going to get put this in a different color, as this is going to be really the spectrum which crude oil is going to stay in for a while. I think we're pretty close to the bottom end of this thing. It's not going to go much under 70. If it does print into the 60s, it won't stay there long, especially if it's true they're going to start buying the SPR back. So we'll see how all that sets up as we go forward here. But that's pretty much the expectations here. I'll go over to the daily chart just for a second, and you can see daily, there's still some overhead resistance. Like I said, 86 is that handle right now. It looks like that's going to stabilize a little bit and potentially be able to get above 86, but we're multiple days of that. And like I said, we're going to come very quickly. This week is going to end on us. Just probably, tomorrow afternoon. No one's who's going to be around on Friday. We'll see. I don't expect anything to happen. I actually hate this time of the year. It just kind of gets into these little air pockets. So we'll see when we come in next week how things set up. All right, so we'll take a look at gold. I've been talking about gold. We got up to the 200. We're starting to fade back into these moving averages here. Algo suggests that we're still kind of drifting here. The 10-period moving average is likely to turn down slightly, so we're likely to stay under the 10, which is 1756. On the downside to 21, 1707. So really look, I'm just going to round it out and say 1700 to 1760 is going to be a range where we should start to stabilize here. The PPMs, the algos on PPM 2 is suggesting we're going to keep a solid 0.25 trend mode on that, which is at that 1707. So we should support down at those levels. So if you see those levels, that's where you want to trade off of on the downside. Upside 1755, 1760. Let's go to the weekly. And you'll see just a bit more of this pattern unfold here. We look at weekly from a market grid standpoint. R1, 1771. High's been 1755. On the downside, S1, 37. We've had a print low of 33. S2 is 17. So pretty much the weekly ranges are right there as well. The 200 week moving average is right at 1744. So just expect to see the markets just hang around in this area. And I think there's some consolidation for a number of weeks before we can move on. All right, next we'll do Bitcoin, and then right after this I'm going to go into the stocks for the rest of the session. So interesting, we did see 15,487. We're back at 16,166 right now. But as I've been showing, these algos are just projecting this market's going to just plummet. And I saw somewhat of a funny meme on the somewhere, I think on Twitter, somebody said, Thanksgiving's a really bad time. This is the point where we tell everybody to, our family, to buy Bitcoin, and then it goes down the next week. So I guess historically, Thanksgiving has been a bad time for Bitcoin. It's kind of funny, but the algos continue to suggest a complete collapse here, folks. It's just really, really kind of crazy from that standpoint. So there's really not much there other than I've been talking about this number, and these are round numbers, 13,000, 10,000. Looks like a very real thing, and because these numbers that are getting out of here are really substantial from that standpoint. All right, so let's go ahead and let's so the big headline for today and today's stream was how low will Tesla go? So I'm going to start off with Tesla. And I think there's some interesting patterns. This is the weekly. It actually suggests, so there's a bit of a hook, but we should hold right here at the moment for Tesla right at the 200-week moving average. I think this is actually the first time that we've been at the 200 and going all the way back to March of 2020. So we're probably more at an extreme. The algos on a weekly basis are suggesting that at least we're going to start to turn up a little bit here from the standpoint of the downward momentum is going to burn off. And it depends on how we trade over the next couple of weeks, but we should stay well under the 216 level. That is the 10 moving average, and that is dropping at 13 handles. So there's going to be a lot of resistance right at 200 here as we go forward. And I'm just expecting to see some stabilization around the 200. But let's take a look at what's really possible here. And I'm going to see. There's not a lot of data here for a monthly chart, but I think there's some numbers out here that are going to be significant to watch around 188 But right now the algos won't run on this because there's not enough bars to run the algos on here. But we're very likely going to head back into, I think, the potentially 160, 140 level on Tesla. But initially we're going to hold this 40, which is 188. Then we should get sandwiched between the 10. This is on a monthly. So the 10 is 265, but it's going to update about 30 down. So 240 upside, and we're looking at, we'll call it 190 on the downside. So we're fairly, let me get this number right. Yeah, 188, and yeah, so we're looking like that's going to be the place where we're going to have to support here. If we don't, we got to get back above that level on that 40, and if we don't, then this thing rolls over and we start printing down. This is the Cathie Wood scenario where everything rolls over and goes back to where we started. So everybody knows that Tesla's valuations are just ridiculous, and it's, at least from my viewpoint, I think it's fairly obvious that not every car is going to be electric. They're getting, I think their quality is starting to come into play. I've talked a lot about this. They're not that good at cars. They're not going to be, you're not going to have a 20-year-old Tesla because the battery's going to die and it's going to be very expensive. A lot of folks are going to throw these cars away like Pepsi cans when you're done drinking. So there's going to be a lot of things, issues, I think, down the road. And I'm not sure that a lot of this stuff was thought out very good. But, it was a fun ride. We did get, like I said, stability around this level. That's not going to happen tomorrow. But this chart here is really the downward pressure here. We have a minus 5.07 10-period moving average, which is right now at that 265 level. And that's going to take a while to bleed off enough that that's not going to be an issue. So a simple 10-month moving average will tell you really the cap of this market, and you're not going to see a lot going on from that standpoint. So let's go ahead and go here, and we'll just stick with the monthly here at the moment. And what we'll see is since we do have enough data, Apple is also continuing to deteriorate. Has a similar, you get the 200, the 40-month moving average at the 122 level. We're trading 148, and we're probably just going to get sandwiched in here between the 10, the 21, which is right now at 154, 150. And then on the downside, we're going to have major support 122. So far, we've been to 130, 134 this month. Let's just kind of go top down. We'll go to the weekly. Weekly's got some new downward projections suggesting we're going down potentially to the 200-week moving average, 118.57. I don't think anybody wants iPhone 14s. They've pretty much ruined the iMacs, and people that I know that are big Apple fans aren't really liking Apple like they used to. The iOS is just on the phones get worse. The OS on the computers just get crazier. Microsoft's not doing a better job, by the way. They're not doing any better. There's just a lot of issues with a lot of the technology out there. But the bottom line is what's being forecasted here on the algos on a weekly is really that the downward pressure is going to remain on this 10-period moving average, which is right now 145. We're just trading just a touch above this number right now. We're 148, so 145.80 is where that number is. We get below that, then all of a sudden you're looking toward moving down toward the 200, which is 118. And that number is, let me just see what, yeah, it's going up about a month, a dollar per week. So that'll be moving toward this 122 level pretty quick over the next several weeks. I guess the biggest concern that I have is these downward Fibonacci projections, 115, 72, 99, 89. So it doesn't look like the tech world has much to say. And if you watch my quarterly forecast for the stock market, then you know that coming into probably second Q2 of 23 is looking a little like we could have some more weakness there as well. So we'll just continue to walk this forward. Like I said, over the next couple of weeks, I'll work on getting things together. Okay, so now give me a couple stocks that I can cover. We have about 15 minutes to go, and I'll cover some of your stocks. So give me some stuff. Yeah, just while this is setting up here real quick, let me just go back and take a look here. I get Tesla up at the top. We're up about 1.25% today. Amazon's another real dog as well. Apple is kind of trying to stabilize here at the moment, like what I was just talking about. Zoom is down, what, 6.7% after their earnings out. Yet more junk stocks like PayPal, AMD. It looks like the semis are trying to stabilize here. We'll see how that goes on. BABA has got a decent print as well. These are all monthly charts I'm bringing up here just real quick. So, all right. So it looks like some Amazon, Merck. Let me write down a couple of these, and we'll go through these. Yeah. Just did Tesla. So, give me just a minute. So I will cover several of these. All right, so I've got a list here, kind of random, but we'll go ahead and go over, and we'll do a couple things. Let's go over here to TradingView, and let's start with Amazon. What we're seeing here in Amazon from this is a weekly chart, so we're going to do weekly reviews on all of these. Is Amazon is, I'm going to clean this up a little bit. I'm going to take the market grid off, and I'm going to just clean this up a little bit. But Amazon is looking like we're probably going to bottom in this level down here right now. The resistance is going to be at 105 on the upside. Last trade 92, so that's a long ways away. We should consolidate in here, but the moving averages are all down, so there's a big downtrend that's going to last probably into first quarter and possibly beyond. So what's going to happen is the 21 period moving averages is going to roll over. The 40's already rolled over. Ultimately, the 200 is going to go negative. Right now, it's still got an upward slope, you can see here, and all this looks like it's going to roll over. So if we hold this range here, I'll draw in what I think is likely to happen here. If we get into this range here, we probably end up setting up some kind of formation here where we're going to get where you're going to get something, some kind of pattern here like this where we get a range. So this would be a really good stock for range trading type situation where you're going to just get in a range. You're going to use that. This is a weekly chart, so 10-week moving average is upward bound. So you probably be able to write some straddles and do some pretty interesting things around this range here. Maybe considering that this bottom end is probably the low here is down here at 85, so 92. You should be able to put some decent, sell the 100, 105 strikes against selling the puts on the downside. You should be able to take all that premium there, whatever they're giving you. Should be able to roll those monthly and probably make a fair amount of money. But the algos are suggesting that we will stabilize here, maybe trade back into the 21, possibly the 40, but this is weeks and weeks away. So there should be plenty of opportunity, especially with this downward slope in the 10. That's going to be something you can play off of there. Yeah, I want to do, it's just, we'll do Nvidia. This is what I was just talking about. This is the weekly. I know there's some new chipsets coming out literally like next week, if I'm right about this. So there's going to be, I'm actually counting on it because I want to buy a new video card cheap on Cyber Monday. That's my goal. But the point is looks like we've got nice upward slope here. The 200 period moving average this is weekly again, 200-week moving average, 140 even. We printed down to a low of 137.50. We're last at 155. So we've actually got 3 Fibonacci projections here. We've already satisfied one. The upward projections, 160.32. 180, 192 is the range in that. Probably the fib target 2 is the most likely at around 175. 180 is going to be an upward target here. You should get some resistance here, but this is a pretty good looking chart that they're finally, after hammering these things down, they've gotten to a value where we could see some reasonable upside on this. All right, so I want to keep moving as quick as I can. Somebody put up this ALB. Looks like we're topping out here on ALB weekly. It looks like all this stuff is going to turn down, probably heading back toward the 241, 242 level on the downside. Doesn't look too drastic, I don't think. Yeah, looks like everything's going to roll back. I don't know if these fib targets will come into play down here. They're down at 223, would be just below that 40. But it looks like this is starting to get a little tired. There's probably a little echo rebound in here. Let me go to daily just for a second to see what's set up here. Yeah, it looks like maybe some stability here. There's some short-term activity here, but you've got resistance at 296. Support right now at 277. We're trading 278, so you probably get a little trading range. But the big numbers are here on the weeklies, and algos are suggesting that all of this stuff is going to roll over and be similar to what we did here at this previous level, where we trade down into these moving averages, and ultimately maybe it can recycle. Don't know even what this company does, but we'll just go from there. Okay, let's do what time we're getting to be. We've got time for maybe. Let's do Duke Energy. I used to work in their building once upon a time. So we traded way down here to the into fib target. This is the weekly. Fib target 2 was over here at 86.78. We printed down all the way to 83.76. Algos are suggesting we're going to continue. You got upward projections right now for Duke 156, 106, call it 107, 111 is extreme, but at least we're going to get back probably toward above this 21 period moving average. There will be resistance right here at 101 and a half, and then again there'll be resistance around 104. Fib target 2 right now is 106, so 104, 106 is a reasonable target. And really, if you look at this, the stock's really been kind of a mess here. Did have a decent uptrend. I'm just going to draw something in here to discuss this. But if you look what really is going on here, we're getting these zigzag formations, and I suspect we're just going to see, more of this, that we end up there's in this one of these trading ranges, which is great because you know that you want to buy down in these ranges, and you should be able to get all this stuff set up pretty good. All right, this is probably going to be so somebody asked for Unity software. Take a quick look. This is weekly again. There's not a lot of data on this, so I can't get the algos to run, unfortunately, but it does look to me that we're right around support 31 handle, maybe moving up towards the call it 48 to 51 over the next several weeks. So there's probably a short trade there, a long trade there. Yeah, so somebody brought up NFL, National Fertilizer. Interesting chart. Really just a trading range. There's all kinds of projections all around here just because of the volatility. Really a tough chart to read. Let me take off the fib ratios, just take a quick look at the stock itself. Yeah, you can see we're just really setting up a range. We do have an upward slope here, but the algos are suggesting that there's going to be a little downward pressure here. So I suspect that this sideways range is just going to continue from that standpoint. Okay, folks, I'll come back on screen. We got about a minute to go. Appreciate that. Try to get through some things. Always fun to do those impromptu kind of analysis. But anyway, tomorrow will be the final day, and we'll set things up for the balance of the week. I will not be live on Friday morning. I have to be out of town, so that won't happen. But next Monday I'll be back, and we'll be doing, as usual, the morning show. So make sure you tell your friends, subscribe, hit the like button, do all, hit the notification bell. Let everybody know you like what's going on here. And I'm sorry that that there's not more time for me to go on. Somebody said they'd like me to come on in the last hour too. Just not going to happen. Unfortunately, just too much. But I appreciate everybody being part of this channel and all that. And I see the bot. Yeah. They always manage to get in by the end of the session. All right. I killed him. I thought you wanted BOT symbol. That's pretty funny. Anyway. Yeah. So anyway, looks like just a quick review as we come back. Here we are trading back at the highs of the session. Let's go over to one last chart and then we'll call it quits for the day here. Let's come back over here. So we did get a bit of a rebound back in. We printed up to 85, so I guess maybe 87's R2, correct? Maybe that's where we went. We went down to 57. Let's see, what was the low here? We got to 62 and 82. So looks like we're trying to print up to this 87 number. Maybe we get 4,000. Maybe that's what they want. There's some optimism coming into the Fed in minutes. Like, I can't imagine anything's in there that we don't already know or understand. But, you know, there's a definite bid here. We just printed a new high as we speak. So definitely some things going on out there. I just want to go back here just real quick because I want to bring up. I want to see what this. Yeah. So all of a sudden we get a little stronger view on this. On the algos turned back up. So we did get that first bar down. If you remember, I said there should be one bar down. We should see an upward bar. That's exactly what we're getting here. And the market grid did turn down, as I was talking about. Let me get full screen so you can see it. This is what was being projected. If you go back an hour, the algo was projected that we'd see some strength on the upside, and the bottom line is that we're getting that grid turned down. We actually printed above STX here at RTX. RTX was 82.58. The high here was, see that there's so much data here. I got to spin way up to see the high of this. The high was 86.50. So what it's saying now is just for the next couple hours, we should see some flattening out here. This is probably the extreme, which is put us up there. If we go over here to the, we'll just do this final analysis here, update the end of the session, is we're looking at, this is weekly. Let me get to daily. Yeah, let me just get the market grid back up here. So market grid here is looking at 86.96, 86.50 high. So we just printed the R2 level. So anyway, folks, that's going to do it for today. Ran over a few minutes, but it looks like all the algos are setting up some really good patterns, and we just printed R2. So we'll see if that's the end. Next level is over the 4,000 handle. I think of what is the next level? It is 02, 4,000, 0225, RTX 4,015.90. Maybe they want to run this thing up before the Fed minutes. So anyway, folks, thanks again for watching. Hit that like button before you leave. Appreciate everybody watching, and we'll talk to you same time tomorrow. See you then. Yeah, Andy, I never refuse. I've covered Tesla for the last 2 years. I think you, yeah. See you, brother.